In today's video, we're going to break down a brand new XRP chart setup that most people are completely overlooking right now. And honestly, what it's showing could mean that XRP is getting ready for one of its biggest moves in a very long time. We'll also talk about the growing debate surrounding Ethereum, private banking chains, Ripple, the XRP ledger, and why many investors believe XRP may actually be positioned far better for long-term adoption than most people realize. Hey guys, welcome back to Whiteboard Crypto Update. In today's video, we will talk about XRP. So be sure to stay focused, as you surely don't want to miss out on this. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads. This video is for educational purposes only. It is not financial advice. Always do your own research before making any investment decisions. First, I want to start with something that has been creating a huge amount of confusion in the crypto community recently, especially among XRP investors. A lot of people have been sending around clips and interviews talking about how major financial institutions, banks, and organizations connected to SWIFT are exploring Ethereum-based technology and private blockchain systems. Because of that, many XRP holders are starting to panic and asking whether Ethereum is somehow taking over the banking narrative or replacing XRP in the future financial system. But to really understand what's happening here, you have to understand the difference between public blockchains and private enterprise chains. This is where many people completely misunderstand the situation. What companies connected to Ethereum are doing right now is helping banks and institutions build private blockchain infrastructure using Ethereum-style technology. On the surface, that sounds incredibly bullish for Ethereum. But the important thing people miss is this. Those private chains are not dependent on Ethereum itself. They are simply using similar technology frameworks. Those same private networks could connect to the XRP ledger just as easily as they could connect to Ethereum or any other blockchain ecosystem. And honestly, this situation actually exposes one of the biggest weaknesses in Ethereum's long-term model. Ethereum was originally designed around the idea that it would become the giant application layer of crypto, almost like a digital app store, where every new blockchain project would build on Ethereum forever. The vision was that developers would come to Ethereum, create their applications there, launch their ecosystems there, and remain part of Ethereum permanently. But what we've actually seen over time is the exact opposite. A lot of projects start on Ethereum because it gives them visibility, liquidity, and access to users early on. But once those projects grow large enough, many of them decide they no longer want to rely entirely on Ethereum's infrastructure. Instead, they build their own independent chains, their own networks, and their own systems. They still may connect to Ethereum in some way, but they don't stay fully dependent on it. That's an extremely important shift. The successful projects eventually leave or become more independent, while many of the smaller unsuccessful projects remain behind, creating congestion, bloating the network, and contributing very little value. Over time, Ethereum ends up carrying a huge amount of inefficiency. And this is exactly why many people now believe the future of blockchain will not be one giant chain doing everything. Instead, the future likely belongs to highly specialized blockchains, where each chain focuses on a very specific purpose. Some chains may specialize in gaming, some may specialize in AI, others may focus on tokenization. And some, like the XRP ledger, focus heavily on payments, liquidity, and financial settlement. That distinction matters a lot, because Ripple and the XRP ledger were never trying to become an everything chain. They were built specifically around speed, efficiency, low transaction costs, and financial interoperability. Instead of forcing everyone to build directly on XRP, the XRP ledger strategy has always been about connecting efficiently with other systems. That's a massive strategic difference. And in many ways, what we're seeing now actually validates the XRP approach. Think about it logically. If a business becomes extremely successful, why would it want to remain limited by another chain's speed, fees, congestion, or scalability issues? At some point, large enterprises naturally want their own infrastructure and more control over their systems. That's exactly what we're seeing happen across the crypto industry. Ethereum's original everyone builds here forever model is starting to crack because the larger projects eventually want independence. Meanwhile, XRP's core thesis has remained incredibly simple from day one: be the fast, cheap, efficient bridge for liquidity and settlement. And so far, XRP continues to execute extremely well in that role. This is why private banking chains are not necessarily competition for XRP at all. Private chains and public chains serve different purposes. In reality, they will likely work together. It's similar to how private databases and the public internet coexist today. Large companies use private internal systems every single day, but those systems still connect to the broader internet. One doesn't eliminate the other, they complement each other. The same thing will likely happen in blockchain. Private institutional networks may handle internal operations, while public decentralized chains handle settlement, liquidity, and interoperability between systems. That's why the real competition isn't between XRP and private chains. The real competition is between the major public Layer 1 blockchains themselves. You have Bitcoin functioning primarily as digital scarcity and a store of value, Ethereum trying to become a broad application ecosystem, and XRP focusing heavily on liquidity, payments, and fast settlement infrastructure. And honestly, many investors now believe XRP may be one of the clearest blockchain narratives in the entire industry because its purpose is so direct and focused. Now, with all of that said, let's move into the XRP chart setup that has many traders getting extremely excited right now. Because this is where things get really interesting. There's a volatility indicator forming on XRP that historically has preceded massive price movements. Specifically, we're talking about the Bollinger Bands tightening aggressively on the XRP chart. For those who may not know, Bollinger Bands measure volatility. When the bands compress tightly together, it usually signals that a major move is coming soon. The market essentially enters a pressure cooker environment where price action becomes compressed before eventually exploding in one direction. And right now, XRP's Bollinger Bands are becoming incredibly tight. In fact, the last few times XRP entered squeezes like this, the result was enormous volatility shortly afterward. One of the previous squeezes led directly into XRP's massive rally near the end of 2024, where the price exploded hundreds of percent in a relatively short period of time. Since then, volatility expanded again, then compressed again before another strong move higher. And now we're seeing another major squeeze forming. What makes this even more important is the fact that XRP appears to have already established a strong long-term bottom during that sharp correction into the $20 to $1.30 range. At the time, a lot of fear entered the market. Many people believed XRP could collapse much further. But multiple on-chain metrics, broader crypto market indicators, and Bitcoin-related signals suggested that the worst of the correction was likely already behind us. And so far, that bottom has continued to hold. Now, liquidity appears to be building once again underneath the surface, while price compression continues tightening. Historically, this combination has often led to violent volatility expansions. And the thing many investors fail to realize is that once these breakouts begin, the market usually moves much faster than expected. Most people spend months waiting for cheaper prices, hoping for one more dip, only to watch the market suddenly reverse without giving them another opportunity. That's why periods like this are psychologically difficult. The fundamentals around XRP and blockchain adoption may look incredibly strong, yet the market price temporarily refuses to reflect that strength. Many investors become frustrated because they cannot understand why the technology and adoption narrative appear bullish while the market still moves sideways. But sometimes the market simply misprices assets temporarily. And historically, those moments often create the biggest opportunities. If markets instantly priced everything perfectly, most people would never get the opportunity to accumulate positions early. The reason opportunities exist at all is because markets take time to recognize value. And right now, many people believe XRP may still be in that phase where the market has not fully recognized its long-term role in the future financial system. Meanwhile, Ethereum is still trying to solve identity questions around scalability, fees, and ecosystem structure, while XRP continues focusing on one clear mission: becoming fast, efficient liquidity infrastructure for the digital economy. That clarity could become extremely important moving forward, because eventually the blockchain space will mature. Speculation alone won't dominate forever. Real utility, efficiency, speed, interoperability, and actual use cases will matter more and more over time. And many XRP supporters believe that environment could strongly favor the XRP ledger. At the end of the day, nobody knows exactly when the next major breakout will happen. But what we do know is that volatility compression, like we're seeing right now, does not usually last forever. Historically, these setups eventually resolve with powerful moves. And based on the chart structure, liquidity profile, and long-term positioning, many investors believe XRP could be preparing for a significant breakout toward much higher levels once this compression phase finally ends. The XRP ledger appears strategically positioned better than ever as the crypto market continues evolving into a more mature ecosystem. And if this volatility signal plays out the way it has historically, XRP holders may not have to wait much longer before the market starts paying attention in a very big way. Well, guys, that's all we have for you today. What are your thoughts on XRP? Get involved and let us know in the comments down below. If you guys like this video, then be sure to give this video a big thumbs up. Thank you for watching, and we will see you again in the next video. Goodbye.